Happy Monday, everybody. I hope you had a good weekend. Today is January 29th, 2024, and this is your Monday market update. Last week was another big week for new highs, so let's review how things got there, and then we'll preview this upcoming week, big in many ways. Stocks gapped higher on Monday as momentum from the past week carried forward from the relatively quiet weekend. U.S. markets ignored the weakness from Chinese markets and more so from the Chinese economy as the PBOC came up short in the stimulus department. Back home, the leading economic indicators, the sole eco data for the day, came in slightly better than expected, but still negative for the 21st straight month. Just think that one through, will you? This data point has been pointing to a weakness in the U.S. economy for nearly 2 years. Check that versus the S&P 500 returns. Now you see why either this is questioning of the data or questioning of the market move. By the end of the first trading day of the new week, the Dow and the Nasdaq were each up about 1/3 of 1%, the S&P up a bit less, up about 1/4 of 1%. Notable that despite the large contribution or lack thereof to the Dow of Boeing, the Dow hit 38,000 for the first time on Monday, and for the Honesty and Research Award given by me, Gus Richards from Northland Capital Markets changed his rating on AMD from a valuation standpoint. The new rating, heck if we know. Seriously, that's what it was. Really a market perform equivalent to a hold, but the honest heck if we know was refreshing to hear. Stock market was little change at the open on Tuesday as gains continued to be digested. Earnings from GE and 3M both missed estimates and indicated some slowing consumer demand. Eco data here and globally kept things in line. Netflix was stronger after the close and again spoke about raising prices. Again, inflationary, we'll see. Other tech companies, remember those stocks that have been at the heart of this big move in the past 13 months or so? Apple, Microsoft, Amazon, Alphabet, they're getting upgrades, top picks, and target price increases. Late or early? Time will tell. At the end of the day, the Dow was down 1/4 of 1%, S&P up 1/4 of 1%, and the Nasdaq up just under 1/2 of 1%. Wednesday started up again, gapping higher on Chinese news about rate cuts to stabilize the economy there, supporting new growth. Eco data from Europe leads one to think that you may see rate cuts there soon also. Netflix was up over 10% on their earnings, and U.S. eco data had stocks pull back a little bit, then stabilize. New highs in the S&P briefly, then as we have seen a bunch of times, a very weak 5-year Treasury auction, yields and the dollar spiked higher. S&P bled lower into the final hour and concluded what looked like a strong day, pretty much unchanged. The Dow was down 1/4 of 1%, the S&P up 1/10 of 1%, and the Nasdaq was up 1/3 of 1%. Another gap opened for stocks on Thursday, with eco news and earnings providing the fuel. Eco data was favorable to the story. GDP came in at 3.3% to the positive. Durable goods were solid, and jobless claims rebounded to show a cooling labor market. Remember that bad news is good news on that front. The tale of two stocks. Tesla was a disaster for earnings, and it was a star, and IBM was a star. Tesla down 12% at one point, and IBM up 13% at one point. For all those who think this is not a stock picker's market, at least Thursday, there it was. The luxury shoppers were not as missing as people have thought they were in the LVMH earnings, and even American Airlines backed that up. Stocks rolled over as the positioning for Friday's eco data, the PCE, wait for it, it's coming up, solid 7-year Treasury auction, and the stock started to drift higher and finished near the upper half of the day's trading range. Dow was up 2/3 of 1%, the S&P up 1/2 of 1%, and the Nasdaq was up just under 1/4 of 1%. Big news on Friday kicked things off, of course, PCE, the Fed's preferred inflation measure, up 0.2% year over year, under 3 at 2.9%. Up 0.2% month over month, year over year under 3% at 2.9% positive, in line with the month over month and less than estimates in the year over year. Sorry about that. Figure it out. All 3 major indices opened lower on the day. Not to miss a chance, FactSet reported that after 24.7% of S&P 500 stocks reporting earnings so far, 72% have beaten forecast. That's 1/4 of the stocks down, 3/4 to go. Let's see what it looks like at the end of that. Oil may be telling us nothing or something. Recall that this is the push me pull me of demand, aka growth, and geopolitics, aka war. Back to $76 or so per barrel. This is a real fight between the two sides, but up about 4% on the week. By the end of the day, the Dow was up 1/4 of 1%. S&P and Nasdaq ended the week, the winning streak. S&P down is 0.1%, and the NASDAQ was down just over a third of 1%. For the week, the Dow was up 0.75%, S&P up over 1%, and the NASDAQ was up just under 1%. Another awards for research honesty when HSBC, in a major market report, they said there are really two market temperatures right now. One, nothing works, like from August to October when there was nowhere to hide. And two, everything works, like the last 3 months. Almost all asset classes but commodities have gone up. Yes, I wonder if they're going to give the response to where's the market going to? It'll go up, it'll go down, or maybe it'll stay the same. Debate continues on the rate cut question, but markets have started listening a bit at least, per the traders on the futures. 97% chance that the Fed leaves things unchanged this month. That's this week. 52% chance no change again in March. This is a big move down from where it was. If you want to know what the next few days should bring based on the data, we have that too. I have to admit, I only tell you this because how crazy I think it sounds, but data from 1953 to 2023 shows that when the S&P 500 entered the last 4 trading days of January, up more than 2%, it closed in the green 66.7% of the time. Median performance of about 2/3 of 1% positive. That's for those who don't get enough data points to try to feed into your planning. So as we look into this week, let's see what we've got. We have a long list of important earnings. I really don't have to tell you which ones, but almost all of the big ones. Microsoft, Apple, Alphabet, Amazon, Meta, even ExxonMobil. And if that weren't enough, Fed meeting on tap this week too. Recall that I think the Fed may move the market in the short term. Fed meeting is on Tuesday and Wednesday. Decision to come out on Wednesday, and press conference too. We'll see what Powell does. I'd watch for him to try to rein the market in a bit, at least for expectations. Today will be a bit slower on the eco data, but get ready for more of the rest of the week. We'll get housing prices and jolts on Tuesday, ADP jobs, very important employment cost index report, and that Fed statement and press conference on Wednesday. Thursday will bring jobless numbers, and the week will wrap up as jobs weeks do, with non-farm payroll on Friday. Add in the University of Michigan consumer sentiment and inflation expectation also on Friday. This week gets Fed and jobs all at once, so expect some fireworks. Overall, I still believe that earnings will drive the markets in the long term, and this is the time we can really get an idea of what the valuation of this market really looks like. So after a week that was full of records, as small as they may have been, a win is still a win. We have a week full of Fed and earnings ahead of us, and in the short term, that will allow for some fireworks. Please recall that the long term is what matters most. We'll continue to talk about that, your goals, in our meetings, and check out the Friday planning videos as well. For now, have a great week.